Welcome to the Cashflow Project podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project podcast. I'm your host, Steve Fierros with Tri-City Equity Group. Today, excited, we've got Jack Miller on the show. Jack's the president of Gelt Financial, a non-bank, opportunistic, private commercial lender and equity investor since 1989. So been around the block. And definitely, I know he's got some experience. I want to pick his brain about that. This company, they offer a wide range of mortgage products, including bridge loans, no income verification, foreclosure buyout programs, JV equity, preferred equity, mezzanine debt. So we've got a wide range of experience, it sounds like, in the financial markets. So I love his quote too for the company. So it says, when your bank says no, we say yes. Jack, welcome to the show.
Be pleased to be here with you and your audience. I'm excited about it.
Yeah, no, I really appreciate you coming on and sharing your insight here and your wisdom. So, well, kind of fill us in a little bit. How did you get started in the space that you're working in? Did you come from a background of banking and financial services, or how did you get your start?
No, Steve, I started the company February 1st, 1989, but I really started in business, and I'm 61 today. I started when I was about 18. And when I was going through high school, I had dyslexia, but they didn't really know what dyslexia was then. So going to college was not an option, but I always loved real estate, loved finance, loved money. And I was blessed with, I love what I do. So for me, hard work, working 7 days a week was never really working. I really enjoy every moment of it. So I started when I was very young, and I've been able to maintain and pivot through the different economic cycles. And that's really been the stalwart, and what's really kept us alive is being able to change as the economy changes, self-understood technologies change. Really, everything's changed. Everything's changed, but everything's still the same. So no formal training in it other than getting beaten up a bunch of times.
Half the time of it, that's the life lessons, and that's where you learn, right? You're adding tools in the toolkit every time you go through a problem. It's like, oh, shucks, how am I going to solve this? You know, like
100%. And I have the grace to show it.
They've been coming in on me now for a stretch too. So I don't know. I feel you on that.
No, yeah.
Well, I'm curious to that because you're right. Like you talked a lot of there in your quick intro there, the change that's happened, let's say in your life and time in the business. I mean, I'm blown away by even the last, let's say 20 years. That's about how long I've been in real estate, and just the way that we've done business 20 years ago, right? Compared to what it is today, both the marketing tools and the forms of advertising and kind of the technology tools and all that. I mean, it's been crazy just to see the amount of change that's happened in a relatively short period of time. And so you've got even an additional period of time. I'm curious, like, what is your take on that? And how do you manage the change? How does that work out for you guys?
Managing change for some people is hard, for some people is easier. Life changes at a very rapid pace the past 100 or so years, and it's going to change at an even faster pace for the next 20, 30, 50, 100 years. We've just been able to change with the times. Sometimes we've been a little slow, sometimes we've been a little fast, but frankly, it's been survival. Unless you change, you don't survive in our business because the economy is always changing and everything's always changing. So it's a survival-based instinct to change. And that's what it is, and for us, it's been good. I always said there's two things you got to deal with in life. One is life is not fair. People always say, oh, this isn't fair. That's not fair. Guess what? Life's not fair to any of us. And the other thing is life is always changing. So you have a choice. You can either fight it or embrace it. We've always taken the approach, let's embrace change and hug it and try to make the most of it.
Yeah. And that honestly, that puts you in a position of being, let's say, an early adopter, right? Because it's like, okay, hey, the market is shifting. We need to know that. Let's say whatever capital you're trying to do, whoever it is that you're trying to solve problems for, right? On the debt side, the lending side. So yeah, if you embrace it, then that's going to put you at the forefront, the cutting edge really of whatever is coming out that you can solve problems for. And that creates opportunities too, right? That's what we're on the lookout for.
When someone is self-employed, their number one job is to be in business, to stay in business. And a lot of people don't realize that. And that's the number one thing. You got to stay in business. You got to be here for another 5, 10, 20, 30 years, whatever it is. So we're always looking at that. But Gelt, we take a very long-term approach to things. We're now a second generation company. We take a very long approach to things. And our number one thing is, how do we stay in business? Which sounds crazy, but most people don't. I think when you adopt that attitude, it gives you a little bit of a leg up.
That keeps you hungry. Now that you say that, right? It's like, how do we stay in business? Because then you don't take for granted like the prior wins, the prior successes. Oh, I'm going to live off of the wins from the last couple of years. I'm sure we've both experienced some pretty massive wins these last few years, right? For business, it's been pretty awesome. If you're owning assets, I mean, everybody's been a winner. But of course, it's like, how do we deal with that moving forward? That kind of stuff. So you're exactly right. So what kind of challenges are you seeing, let's say, facing investors currently? Now, you guys have your hands in a lot of different lending products. So I'm kind of curious about that. I know I only touched on a kind of a small handful in the intro there, but what would you say, because you guys have a wide mix there, what would you say is kind of like your primary forms or maybe even some favorite forms of lending and some of the different products that you guys offer?
We love to help people. We love supplying capital to either real estate investors who use our capital to either make money or to save themselves and to get out of trouble. And it's the same thing for business owners. We're supplying capital to business owners to expand, to make money, or to save themselves, to get them out of trouble. And it's very gratifying just to do that. Even though we're not cheap, we're a lot more than banks. Even though today we're not a lot more than banks or a lot more than the SBA, we're more competitive than we were a year ago because our rates haven't gone up fortunately, but it's great to be able to help people. And we are very diverse. We look at things through a creative eye. And because we're not selling loans on the secondary market or to Wall Street or anything like that, we're using private capital. We're very entrepreneurial. So we provide bridge loan debt. We provide traditional debt. We provide foreclosure bailout, debtor in possession, JV equity. We're buying distressed debt. If there's a good deal and it needs capital, we try to find a way to get in the deal by using our capital. And we love to partner with people because we're only just a small group of people. There's like 16 of us in the office. But if you can use the multiplier effect in, say, hundreds and thousands of people all throughout the country who are finding deals, and we can provide the capital, it works for good partnerships.
Well, for sure. And then you mentioned it earlier. It's like, okay, hey, anytime we go through a cycle, you're solving new problems. Again, that's another strategy. We may not see that again once that kind of fizzles out through one cycle. But again, if you're into business a long time, and you mentioned it yourself, like, hey, we take a long-term approach to this, some of the stuff comes back around, right? And it's important to know, oh yeah, man, that was really popular, or that was a great strategy that we were using 15 years ago. Well, it's made a comeback. It wasn't a need for it when the money was cheap, but now, man, the rates are they got a lot more expensive. Hey, let's go back to some of this owner financing or sub two or whatever, like to bring back some of these kind of older tools. I will say that's a huge advantage that you would have in the marketplace to go and kind of find out these opportunities with that set of lens of, hey, I've got a big tool belt. What kind of problem do you have? Because we can solve it.
You're 100% correct. It's funny. Right before I was on this call, I was talking to one of the people in the office, and they were telling me about a deal we approved. A broker has been trying to get this lady money for 6 months and couldn't get it done. We asked a simple question, and the question was, does she own any other real estate? And the answer was yes. And we said, we send it to us. We took a look at it. We said it will provide the financing using additional collateral. So we're trying to solve people's problems and trying to be at the crosshairs between their problems and our interests and providing value to people who want to borrow money or are looking to get in real estate. And part of the reason people come with us and stay with us is not only for our capital's capital, but because we have a tremendous amount of experience across the spectrum for decades, for many different economic cycles, we add a lot of value to people.
Oh, for sure. And you just make mention of talking about the flexibility, like being able to stay nimble. You can do that because you're not selling to the secondary market, right? You're not having to, okay, well, this has to fit in this box because they're only going to buy stuff if it's within this little confines and we can move it on. Right. But since you guys are staying nimble, you're staying flexible, you can solve many more problems. Right. So yeah, no, I love that.
100% with that. 100%. It's all about solving problems. If we can't solve a problem, we have no utility to anyone. We're never going to be the lowest cost provider. People come to us for speed because we can close within days and for access to capital. That's why they're coming to us.
Wow, that's incredibly valuable. You got somebody, and there's amazing deals out there, right? And a lot of times, like the speed is the requirement.
Give you an example. Another situation, I was brought in to just today. A guy has a office building. I don't want to give too many details because it's fresh. Guy's an office building in a major city in the US. He went through the balloon, self-understood occupancy is not good. There's nothing good. We're coming in, and what we're going to do is we're going to take a piece of the partnership. We're going to fund money to run it through an 11 and restructure his debt. So because we've been through this, the last down cycle in '08 to '11, we have a tremendous amount of restructuring experience. Now, he can't go on the secondary market today and borrow money, can't refinance, he can't borrow money on a second mortgage, but we're coming in as fresh capital, fresh equity to turn the project around. We're taking the long-term approach and saying, we know in a year, 2 years, 3 years, this building is going to get back to a stabilization point. And we're thrilled being in the project for the long term. And because we have a lot of restructuring experience, it lets us get in the deal and work with all the creditors and vendors and stakeholders.
Sure. I mean, and that's incredibly appealing, right? To somebody who has that problem where otherwise, like, what are your other options? Either to sell at some kind of massive loss, or you're going to lose your shirt and potentially other stuff, or worse, there's not a lot of solutions once you get to a certain point, let's say in the life cycle of the debt or somebody's personal financial situation. So yeah, it's absolutely key.
Agree 100%. The real problem that people have is we find, and I find, a lot of people stick their head in the sand and hoping the problems will get better. And instead of addressing the problem right away, they put it off and put it off. And the longer they put it off, it becomes a more difficult problem. And sometimes it's harder for them to get out of, or if they can get out of, it's less financially beneficial to them to get out. So I found over the years that people have a tendency to ignore problems, just like they can't emotionally deal with them. And they just procrastinate. I hate to use that word, but they just can't deal with it until it's really too late. And it's not good.
Funny, right? Because it's like, I mean, it's not funny, but we're talking about, let's say, financial situations and whatnot, but really what it'll always going to boil down to a lot of times, it's going to be human psychology, the human psyche, right? Because at the end of the day, you're still dealing with you're still in a people business. It doesn't matter if you're shuffling paper and we're crunching numbers and analyzing deals and whatnot. At the end of the day, you're still dealing with people. If it's an investment property, hey, you know what? Then I'm dependent on my property managers and my tenants that are in the properties taking care of stuff. And if they don't tell me I've got problems with a leak or something like that, then that becomes a problem, So at the end of the day, you cannot help but to get around people. And so I like that your people ignore problems because it's absolutely true.
Again, I could tell you story after story how we try to help people. But again, that's how we view part of our job is not just suppliers of capitals, try to put the deals together. We manage real estate, we own it. So some people have a narrow way of thinking and we try to expand it a little bit and try to help them.
Yeah, that's incredibly valuable. It really is. And the simple fact that, like I said, if you're an investor yourself, I always think that that's a huge leg up to people that don't, right? Anybody who's in the business, let's say a realtor or a broker or something like that. Not saying you can't be good at your job, but do you own a house? And it's always a key question because I feel like until you cross that bridge, like you don't really have as much insight as you potentially could. So that's another point. That's some kudos to you for you guys.
100% right. And I think you asked me what kind of deals are we seeing done today or getting done? What we're seeing are deals that have to be done. Either they're on a time crunch, they're going to a bank, or they're going to a traditional lender and the lender is dropping the ball or retrading them. So we're getting calls literally like on a Monday in a panic. Oh, I need to close Friday. If not, I'm going to lose X dollars on an agreement of sale. Can you close? And thank God, because we don't do appraisals, we do internal valuation, we can close with days. Or people borrowing money to get themselves out of trouble. Foreclosure bailouts. We just closed on a deal. Believe it or not, they just evicted a tenant who didn't pay since COVID. So we're doing the deals that want to get done aren't getting done. It's the deals that have to get done are getting done. We just closed a bunch of investors, 3 separate pools of investors, coincidentally, who had purchased a bunch of properties on 1031 exchanges, gorgeous properties, credit tenant deals, but they couldn't get financing in a bank in time. We came in, we closed it right away, and then they'll pay us off with bank debt. So the deals we're seeing are the deals that have to get done and need to get done quick.
Yeah, for sure. And that's a credit to you guys for, again, like having the wherewithal for one, to be ready with the capital, but also two, the way that you're approaching it, since it's different, right? You're a non-bank entity. So you're able to approach it with that speed. And that's of the essence, right? Like,
100%. But look, there's a price to be paid for it. We don't offer bank rates. Our rates are low double digits. A bank, I don't know what a bank is today. Who knows? God knows what a bank is today, but I think SBA is probably 9, something like that. And we're low double digits. So you're going to pay us a little bit of a premium, but you'll get across the table and close the deal, where a bank is going to take, God knows how long, could take months if they can do the deal. And maybe they can't, and maybe you don't find out until the day before settlement. With us, you're going to pay a little bit of a premium, but you have execution certainty, and people would rather pay for that premium to get the deal closed.
oh, for sure. I mean, that's just part of the equation, right? Like, it's like, okay, well, hey, lender of last resort, or if you want, again, do you need the problem solved? So like,
We tell people, if you can get it done by a bank, go. They're going to be cheaper. But the reality is, people are coming to us and then they're paying us off. They're selling the property, they're making money, or they're paying us off with bank debt.
sure. And for kind of our listener audience, like, what's the typical kind of range that you guys would go after? Do you have a kind of a, hey, this is our kind of typical buy box or lending box, like, so to speak? I mean, obviously you're very flexible, very fluid, but hey, the core, the vast majority of our loans are XYZ.
Yeah, we focus on the smaller end. So for us, our average loan in the portfolio is about 455,000. So we'll go from literally, we closed 2 deals last week. One was 50, one was 55,000. So we're doing small deals up to 3 and 5 million. For us, 5 million's big. We did one 6 months ago for 5.6 or 5.4 million. But the average deal is between 250 and $1.5 million. We're generally, in terms of leverage, we're generally 65, 70% of the value, not necessarily the purchase price, but the value. And there's a big distinction in that. Now, we also do a lot of blanket loans. So a lot of times at 65, 70%, the people aren't putting any money down. They're blanketing another property, or the seller's holding us the seller second, or they're buying the property under the market. So we're focused on what our leverage is and not necessarily what the borrower was paying for the property. In terms, we'll do anywhere from, a month to 5 years. But even though we're short-term lenders, we'll do 2, 3, 4, 5-year deals. I think we have like 44, 45 deals on the books, more than 15 years. So
Oh, wow.
plenty of our borrowers, maybe we'll give them a 3-year deal and they just extend it every 3 years. There's a certain segment of the population who just doesn't want to go to a bank, and they'd rather pay us a little premium to provide their financing than to go to a bank. And we're fine with that, keeping on the books for however long they want.
Yeah, for sure. No, I mean, as you guys are, it's like a Swiss Army knife, right? Like, it's not going to work for every situation, but boy, we can solve a lot of problems. And that's,
Look, in order to survive, you have to be creative. I wish I could cherry pick this or that. And really, I shouldn't say in order to survive, because we enjoy being creative. It gives us a leg up, and it lets us help our borrowers, whether they be real estate investors or business owners. And that's really what we're looking to do. If we can provide value to them, we've earned what we've earned. We're thrilled to do it.
yeah, no, and like I said, Edmund, and that's what I'm saying. Like, you can feel good about that, because it's like, hey, I'm going to be able to solve your problem. Like, are you going to pay a premium? Yeah, but that's worth every penny because you solved my problem, right? Like,
I'll give you an example of, again, so I was speaking to, it's a deal we closed in December. They came to us. I've known these guys for 20 years. They're good operators. They found a strip center in a suburbs of a major city. They went out, they put it on an agreement of sale. They signed on the bank debt. We put up 100% of the down payment, the closing costs, and a reserve. They didn't use one dime of their own money. We got 50% of the deal. They got 50% of the deal. So from their point of view, they got 50% of a deal without putting up one penny. Okay. They signed on the bank debt. From our point of view, we got 50% of a deal and they brought it to us. So they were thrilled and we were thrilled. So it's a win-win. It has to be a win-win for everyone. And that's their business model and that's our business model. So it works out.
No, it's a total win-win. I mean, it's an infinite return for them because they didn't have to bring any capital to the table.
That's exactly right.
And then I know you mentioned you guys have deals in different places too. Is there any states that you're not going into? Any specific markets that you're focusing on? Or
we can do business in, I think it's like 42 states. The 3 big ones we can't are California, Nevada, and Arizona for licensing reasons. There's a couple other small ones, the Dakotas we can't, and there's one or two other small ones, but we're in most major markets within the US. We're all over Texas. We're all over the Southeast. We're all over the middle of America, Wisconsin, Missouri. You could literally take a map. We have deals, I think, in 25, 26 states now. So we're pretty much all over the place.
And then how do you feel like obviously the current debt environment with these rates of having run up so quickly? Like how did that impact your business? I mean, I feel like we've been on a roller coaster, like COVID and then post COVID, right? So you kind of have this roller coaster of, wow, you had cheap money for so long and they were super cheap money. And then now the Fed ran up the rates so high, so quick. How are you seeing that that's affecting like current deal flow or current lending?
It's changed. A lot of the traditional deals just fell apart because the rates, they went high quick. I don't want to say high, they rose quickly and that affected values and people are scared. I don't really focus on it that much. We believe if it's a good piece of real estate, we have a 10 or 20-year horizon. So rates go up, rates go down. It's funny when they did raise rates very quickly, but they lowered rates in like '08 very quickly too. At the time, they would just every month they were lowering rates by 50 basis points, 50 basis. The same run down is a run up. And I've seen that before. So I try to put it in perspective. I think a lot of people are fairly new to the business. When I say fairly new, they got in after the '08 to '11 recession. So they think rates are always low and they don't realize that rates go up and rates go down. So it's changed. We've had to change with it. Volumes change, but you have to reinvent yourself. Everyone has to reinvent themselves. And we don't know whether rates are going to come back down, rates are going to go back up. The only thing I know, they're going to change. That's for sure.
Yeah, for sure. Well, and like that, you have the experience too. Do you find yourself like having to educate some of the borrowers or even just different parties that are coming to the table? Hey, I've got this deal, potential deal, or you may be able to see it with a different set of eyes where it's like, no, this is a deal. You don't even see it. Or do you find yourself having to kind of educate a little bit along that route? Or
I'd love to be able to tell you and your audience, yes. But what I find is, to be candid with you, most people are pretty stuck in their minds. It's tough to educate someone who's 40 or 50 years old in a 5 or 10-minute conversation. People think they know what they know, and that's fine. I'd like to think we've educated some of our people. It would be nice to think, and we try to take a long-term horizon of things. Whether our education works or not, I don't know.
Yeah.
But I think the answer, and what I tell people is, I say, look, if you have parents or grandparents or an aunt and uncle who bought a home when they first were married, ask them what they bought the home for.
Mhm.
And then when they sold the home, ask them what they sold it for. In my case, my parents bought a home in Northeast Philadelphia, and I think they paid $12,500 for it. And I think years later, they sold it for like 200. And when I say years, 30 years or 35 years, I think they sold it for like 200 and something grand later. So the truth is, if they would have paid $12,500 or $13,500 or $11,500, I don't know. My father probably couldn't have afforded the extra $1,000 payment, but it really didn't matter when you sold it for $200,000. I happened to look at that home. I track it on Zillow, believe it or not, because I used it as an example, and it was just sold a couple of years ago for $400,000. So again, I started the company when my first son, believe it or not, was born. The day he was born, I started the company in 1989. One of my sons is in the business, and my job is to make sure we're in business for another 30 or 40 years. So I try not to get caught up on what is the Fed going to do with interest rates next month. I try to say the properties we're involved with, what's that property going to be in 20 or 30 years? Is the population growing? Is the country safe? What's going to happen in 10, 20, 30 years? And that puts things in a little different perspective. I'm not looking day to day on Zillow, what's a property or that. I'm saying, is it a good property? Are we going to want to own this for 10 or 20 years? Are we going to be able to stay with it? And that's the approach that we try to use here. Now, it sounds great, but you need to eat over those 10 or 20 years. So that's a separate conversation, but that's how we try to look at real estate.
Yeah. And I think that's actually a great approach, and I try to tell people that too. And I feel like you gain that perspective the longer that you're in the business, right? The longer that you're employing the how do I stay in business model, that gives you some extra wiggle room to be able to take this, all right, let me take a step back. If we put this all on a long enough timeline, hey, guess what? We win. Right? Like the debate through the currency, the inflation that's all actively going on, like you will win. Like there's just no getting around that. So, but again, that's a perspective that, because I do think you're right. Like most people in the business have not been in the business that long. They haven't seen multiple cycles to be able to glean from kind of that experience. Oh, well, 2% interest rate, 3% interest rate, that's normal. How come it's not like that? It's like, look, that's not normal. You know, so no, I think you're right. And like I said, that's our motto too. When you start setting up, and that's awesome that your son is in the business. I have kids too. And so you start thinking generationally, okay, well, how could we maintain this generationally? Right? Like I'm not going to be here forever. That's fine. I understand that. Hey, how can I set my son and his family, the next generation up? How can I set them up? Is this sustainable? Great. You know what? We're going to buy assets. We're going to hold on to them and we'll win long term. So yeah, no, I think that's a great approach. And it's awesome that you taught him that too. So
Yeah, you're a young guy. You should be buying, and I'm sure you are. If you buy a lot of good real estate, take self-liquidating debt and don't die, that's really the secret. Just buy real estate and don't die. That's it in itself. You don't have to do too much else.
yeah, that's true. Yeah. Don't do stupid stuff, right? Don't contribute to the don't die part, or, contribute to the don't die part. Like take care of
Yes.
yourself. Yeah.
Yeah, don't do stupid stuff. That's a good one. You're right.
No, that's great. Well, you know what? This point of the show is a part we kind of transition to a little bit what we call our fire round. Is that something you're up for?
Sure.
All right. Sounds good. So, first question, what is your best book recommendation other than for all of our real estate listeners, other than the Real Estate Bible, the Rich Dad, Poor Dad? Do you have a good book recommendation that you have?
I always tell people Behind the Golden Arches, the story of the founding of McDonald's. But the truth is, I say that by default. I'm an avid reader. I'm reading constantly. I'm probably reading 2-3 books a month for years, for decades. And I have thousands of books, almost every business book I read. So I'm a big believer in reading people you want to emulate. So I've read all the books about the Gilded Ages, the Carnegies, the Mellons, the Roosevelts. So I just believe in it. And you can get little pieces out of everything. It's hard for me to come up with one book. That's why I always stick with Behind the Golden Arches. It's a great one.
No, that's great. Well, and like you said too, like part of our conversation earlier was like the business can change. The business has the cycles, but at the end of the day, like the people don't change. Like people are still doing the same stuff. Like, I mean, it doesn't matter how far you go back. Like we're still dealing with the same kind of psychology here. So that's great.
If one would study the Vanderbilts, Anderson Cooper, who's a Vanderbilt, wrote a book. But really the story is that the Vanderbilts, except for the line who owns the Biltmore, they all lost their money because they spent it on foolish things. So much can be learned by studying wealthy people and their lineage throughout the past 100 years. It's unbelievable.
Oh yeah. Yeah. No, I know the story for them. Like it's very interesting. Right. And that it actually puts kind of a chart back, like on, let's say us as parents, for those of us that are, okay, hey, let's avoid that. What can I set up that we can do differently?
100%. The family that owns the Biltmore estate, they're the only line who made it. And there was always one in each generation who really led the family. But you need that one in every generation to carry it forward.
Yep. Absolutely. No, that's a point of inspiration too for all of our listeners. Be the one.
That's exactly right.
The next question, what's your superpower? What would you consider your superpower to be?
Being doggedly determined, never giving up. I have zero talents, but I don't give up and I'm very persistent and I love to work.
That is definitely a superpower. So no, that's great. Next question. What's the biggest lesson that you've learned over your career thus far?
Don't get involved with the government.
Don't get involved
with the government. Yeah. I try to stay from that. And it sounds terrible, but I try to stay from anything government involved. I'm not a big fan. Even though we have a great system of government, I've just learned if it turns against you, it's not good. But no, there's not one. People are always looking for one lesson here or one lesson there. It's thousands of little lessons. It's thousands of little things, the negative side and the positive side. The truth is, I say the government is a joke, but the truth is, if it was one lesson, I would say is don't over leverage and keep a lot of cash around. They're the two things you need to succeed. 3 things: keep focused, don't over leverage, and keep a lot of cash around. They're really the 3 things that you need to succeed.
Hey, it almost find some of that it's at odds, but then striking that balance is the key, right? Like don't over leverage, but make sure you have lots of cash. So it's like, okay.
100%, 100%. Just means you need more cash and deals.
Well, right now it's a great time to do it too, because then you're in a position where you can take advantage of, hey, this portion of the cycle where we're in, and you need somebody like Jack to come to the rescue, right? And now he's got 50% equity in Jules.
That's- That solves a lot of financial problems. And I've seen people over leverage that get into problems because of it.
Yeah. Yeah. No, I fully agree. For the busy working professional who's trying to work towards, let's say, financial freedom, what advice would you have for them?
Honestly, live a modest life. Don't overspend. Don't keep up with the Joneses. Buy good, solid real estate and forget about it. Honestly, if you're in your 20s, even if you have student debt and credit card debt, if you buy a property, just a regular single family or a duplex or a townhouse, every 2 or 3 years, buy it, take a 30-year loan and forget about it. You will be in 20 years a multi-million. So buy good property and forget about it.
Yeah, that's the key too. Like solid, good property, right?
Don't
Don't,
look to sell. Don't look to keep turning your dollars. Buy and forget about it.
yeah, yeah. Well, and like I said, this is the benefit that comes with that long time horizon, right? Because it's like, hey, you're going to let the economy do its thing. Like if you, as long as you can pay down, and as long as it's in a good look, because this comes back to location, buy the right properties, right? Buy the path of progress. Like do some homework. Don't get bogged down, get analysis paralysis, but buy the right properties. Hold on to them. Yeah, you're right.
100%. I agree 100% with you.
Well, Jack, if our audience wants to get in touch with you and they want to pick your brain, or that maybe they've got a deal or something that they need some lending on, how can they connect with you? What's the best way to reach out to you?
Just go to geltfinancial.com. You can check us out. You can check us out on any of the social media channels. We have a very active YouTube channel, really all over the internet. You can check us out.
Awesome. Awesome. Well, I really appreciate you jumping on with me today. Guys, go make sure that you check out Jack over at Gelt Financial and pick his brain, bring him some deals. And especially stuff in Florida right now, maybe. I don't know. That could be in Florida. But no, pleasure having you on. I really appreciate your wisdom, your insight, and your expertise in the financial market. So thanks for coming on, and we'll talk to you soon.
My pleasure. Thank you. I love talking real estate. Love talking to you.
All right. Aloha. Thank you. A great episode with Jack Miller over from Gelt Financial. Well, a real Swiss Army knife in terms of lending. So I can't help but to think of Pace Morby and their group and some of the Gator lending that they do. It's very transactional, like, hey, kind of shorter term, but super, super flexible. And Jack's been around the block, had some great insight in terms of market cycles and just general information and knowledge and wisdom really about real estate. And I mean, life at this point. So it's a multi-generational business that they have there. So yeah, no, lots of great insight. So if you guys are needing some lending help, got some questions, or maybe in a tight situation, feel free to reach out to Jack and their team over at Gelt to see what kind of options they have for you. Well, guys, we really appreciate you guys tuning in every week to check out the latest episode of the show. If you guys are finding value, of course, make sure that you're subscribing. I know a lot of listeners like to kind of come and go and check in. Make sure that you're subscribing to the channel. And if you're finding value, please make sure that you're recommending it to other people. That's the only way that we can kind of get this message out, bring information and wisdom and insight, is if we're continuing to grow the channel and that we know that we're providing value to you guys. So I would greatly appreciate it if you guys leave us a 5-star review and recommend it to a friend as well. If you guys have critiques, hey, we're open ears too. Like I said, we'll never shy away from an opportunity to get better. So if there's a way that we can improve on the show in any way, hey, we'd love your comments and love your feedback. If you guys are local, if anybody of your listener, any of the listeners are local and you guys are just tuning in for the first time, or if you haven't come out to one of our previous meetups, check us out on the Honolulu Multifamily and More. That's our Facebook group. You can find us up on meetup.com as well, or Bigger Pockets. And we usually post kind of all of the monthly meetups there. So if you want to come out and you're local here on Oahu, or you're visiting, or you want to come check us out and just specifically fly out for a meetup in Hawaii, a great way to do it. We have those every month. We'd love to put a face to the name, come shake a hand and come meet you. So make sure that you're making plans to do that. But that's going to be it for today, guys. We really appreciate you guys always tuning in, and we always love the support. Go out, take some action. Have a great one. Aloha.